Hello, grads of FinLearn Academy and fellow traders. Let's analyze the market and what lies ahead next week for us. So, what we have seen is a series of a declining market, and market here for a brief period is undergoing a consolidation. Whenever market is undergoing a consolidation, we want to check whether there is a strength or the weakness within the consolidation. So what are the tools which are available to us is first we plot the moving averages. So first I will add the 10-day moving average, and the color which I will assign to the 10-day moving average is white in color. So you can see that prices are below the 10-day moving average, which says that the near term trend is down. Next, to see the short term trend, let's plot the 20-day moving average. 20-day moving average, I will assign a fluorescent green color. I'll just add the thickness out there so it's easily visible. So you can see that market has closed below both the 10 and 20. So as a trader, you stop here, which means that till this level is not breached on the upside, which is 17,291. So let's round it off to 17,300. Till 17,300 is not market doesn't close above that, the bias for the market is negative, and the low around the previous low at 16,800 is likely to be taken out on the downside. So that the averages becomes the resistance part. Now there are two support levels for the market. First is the pivot low, which is what we call a structural support, or the price low, which is at 16,800. And market is trading below the average. So we can clearly say that the bias or the trend on the shorter term is down. And below 17,800, we have the 200-day moving average. So I will assign a different color to the 200-day moving average. Let me give it a lighter blue color. So you know the 200-day moving average is your lighter blue color, which is around 16,200. So traders keep these two levels in mind. On the upside, till Friday's high is not crossed, which is also the 10-day and the 20-day moving average at 17,300. The bias is down. This low is likely to be tested. Once this low breaks, which is 16,800, we don't have any reliable support all the way till the 200-day moving average. So that's on Nifty. And if you see, even in our last videos, we are following the channel on Nifty. This is the channel. And if you see, at no point market has made any attempt to either touch the upper end of the channel. Repeatedly, it is breaking the lower end of the channel. So it clearly says that sellers are in control. So that way, we'll maintain a negative bias on Nifty with a reversal point or a pullback point, or what you can say that till 17,300 is not breached on the upside, be prepared for either 16,800, which is the last low, or even 16,200, which is the 200-day moving average. Now, let's analyze Bank Nifty on the same parameters. Bank Nifty also, Friday's low is both 10 and 20. So clearly, if you see on both your major indices, which is the Nifty and the Bank Nifty, the Friday's high coincides with both the 10 and the 20-day moving average, which itself becomes the resistance. And Bank Nifty has closed on a very bearish note, which means that the 200-day was tested once, it was tested second time. Again, when it was tested, the close is below that. So you will come to know tomorrow, which is on a Monday, whether it gaps down below the 200-day moving average. Then Bank Nifty should see further severe declines. In that case, for us to make a projection, let's take a channel out here. We take this low. Give me a minute, friend. So I'm marking a channel on the Bank Nifty. I'll connect the highs and I'll take the lows and drop it. So once this 200-day is, I wouldn't say it is tested. Once it has closed below this, let's assume it has not assume, we can visibly see that it has broken the 200-day moving average. Whether it will whipsaw, which means that it will do to and fro movement from here, or straight on, it will decline to the lower end of the channel. Projection comes to anywhere around 33,700 to 33,500 odd levels. So both the indices are poised negatively. The Friday's high are crucial points as far as any short-term pullback or bounce is concerned. Till that is not crossed, let's not trade for a pullback or a bounce. So market is a sell on rise with Friday's high as your stop for both Nifty and Bank Nifty. So both the indices, as we have seen that the Friday's high are crucial because both the 10 and 20, which is the near term and the short term average, is coinciding. And for Bank Nifty, it has closed below the 200-day moving average. So that makes the bias for the market negative. And again, I repeat before ending the session, keep a watch on Friday's high. Once that is taken out, then only we can see any upside, or else the current downswing is likely to continue in the near term. That's all for this weekly update. Thanks and have a nice week.